Joining us now from the CBOE trading floor is Scott Bauer, CEO of Prosper Trading Academy. And Scott, when you take a look at the move in oil prices today, trading slightly higher, still though under that $60 a barrel mark, what do you make of today's moves?
I think it's actually pretty muted, and if it just weren't for the fact that the overriding concern is really about slowing economic growth worldwide, globally, then I think we would have seen a sharper move to the upside. You know, geopolitical risk, when something happens like this, we typically see fear in the marketplace and we'll see a spike up. And again, I think that it was really muted just because of the oversupply that we have right now.
Scott, a trend that we've been seeing in the market is some of this geopolitical risk has been offset by record amounts of production. Do you think that this will continue to be the case when you look ahead to how crude is likely to trade over the next 3 to 6 months?
I absolutely do. Now that the decision is behind for OPEC extending their cuts out to early next year, that's off the table now. So, you know, the market trades on fear and the market trades on nervousness and what can be, that's behind us. So the oversupply that we see right now is going to continue, and I think that will take over any sort of these geopolitical risks that we see unless we really get some major blow up. Now, we have Powell speaking today and tomorrow, and there's a lot of talk about what may happen with the Fed and if we do lower rates or if they lower rates, that may help the oil market. But, you know, I do think oil traders are going to be focused on him this week and the rest of the Fed governors, almost like, you know, like they're a diva. They're really going to be tuned in because what he may say may actually move the market.
Scott, one thing that caught our attention, the fact that Iran is producing oil at the slowest pace since 1986. Now, this is amid American sanctions on crude sales. This coming as Iran crosses another line set in the 2015 nuclear agreement. When you just take a look at, and you're saying that the geopolitical risk is being offset by the supply right now, but when you talk about maybe more uncertainty entering into the market, the potential for a major blow up, how high do you think oil prices could climb if we don't see some sort of resolution on this front anytime soon?
You know, if it's just the Iranian issue about sanctions in Iran, I don't know that really affects too much to the upside for what we're going to see for West Texas. Now, if it really gets serious in terms of how much they're going to enrich their uranium, and if they really get up towards the 20% level, which is something I saw earlier today that they may be aiming for, now you're approaching a different ballgame. Now you're bringing very, very consequential circumstances here to something that really could impact the world in terms of them enriching the uranium. However, if it doesn't get to that fact, if they're just staying in this, you know, tit for tat kind of spat, which that's what I think it is right now, I don't think there's going to be much of an impact. But if something does happen to the extreme, that's where you'll see it. But for right now, I don't see much of the sanctions really coming in the way whatsoever and driving oil prices out.
Hey, Scott, switching gears here, just talking about gold real quick. It's on our radar, falling just below $1,400. When you take a look at gold, how much this is just playing into what we're expecting to hear from the Fed Chair Jerome Powell later this week. What are your thoughts on gold?
You know, it's been trading really lockstep with the dollar, and end of last week when we saw gold really retreat, that was when the dollar started ticking back up again. So I think what's priced into the marketplace is Powell's semi-dovish stance, still leaving the door open for maybe no rate cut whatsoever, but probably leaning towards that quarter cut. And if we see him talk about that, or if we actually see that quarter cut later this month, I actually think that's a negative for gold. I think that we actually see it retreat. I think there's a lot of pressure here. We got up to that 1,400 level, lots of selling pressure up there. It's you know, obviously made a nice big run this year, so I think the pressure is actually to the downside.
All right, Scott Bauer, thanks so much for joining me today.